Hey, good morning, everyone. Brian Hoops here, Midwest Market Solutions, Market Insider TV. This is our Market Insider TV opening commentary on Wednesday, June the 25th. Thanks for joining us this morning. We take a look at the fundamentals, news driving our markets and headlines here this morning. I'll be doing RFD TV at 8:15 this morning, Thursday and Friday, talking about the markets and what we can expect with our trades. So I hope you have a chance to tune in for those appearances on the media, and also be doing the Commodity Wrap podcast this afternoon. Cold storage report out today at 2 o'clock Central Time. Quarterly hog and pig report on Thursday at 2 o'clock. Friday, we have deliveries beginning against the grains. Monday, the quarterly stocks and planted acreage report. So a lot of reports coming out here in the next several sessions. Overnight markets, dollars a little bit firmer in here while natural gas is softer. Crude oil bouncing a little bit after such a huge drop in the last 2 days from Sunday night into Tuesday's close. Not surprising to see a little bit of a bounce here as we dropped to $13+ from the highs in just 2 days. Stock market is a little bit higher, very strong technical close yesterday, follow through buying there. So market so far, a lot of these are making some sense. Corn down 3.5, beans off 4.5, meal, oil all lower, wheat down another 3 to 5 cents. In the winter wheat contracts, spring Minneapolis down about 4.5 as well. We continue to see some pressure against the grain markets. Not surprising. Should not be surprising that we're going to see that. If you're looking at fundamentals, they are largely bearish for the grains. So here we go, taking a look at what we can expect in today's trade. Follow us on Twitter, Midwest Markets, Brian Hoops, and sign up for our text feed at our website, MidwestMarketSolutions.com. So weather maps continue to call for nearly ideal growing conditions across the Corn Belt. 6-10 day, 8 to 14 day, calling for above normal temps and precip into the 4th of July holiday. Many times 4th of July is kind of a turning point for the grain markets as far as weather goes. This year we have not had much of a way of rallies, significant rally attempts in corn. Now soybeans have. They just rallied last week to back to their near spring highs. Some producers bemoan that that's not even break even. Wheat futures have come a long ways off their lows, have given back a lot of it in the last 2 days. But we have had a couple different rally chances, I think, in these markets. And now we're seeing a lot of harvest pressure against the wheat, and corn and soybeans reacting to good growing conditions here during the heart of the reproductive stage for corn. And we're getting closer to that for soybeans. Of course, they have a little bit longer growing season with maturities a little bit later. First notice day for the July grains is Monday, with deliveries beginning on Friday's close, the 27th. So if you're long any July futures by Friday's close, please get out of those, roll them or liquidate them before the delivery period. Quarterly stocks acres report comes out Monday at 11 o'clock Central Time. Here's some of the estimates. We have the entire estimate and ranges and everything in your newsletter. Corn acres, 95.35, up slightly from 95.32 last March. Soybeans, 83.65 versus 83.49. So a little bit more corn, a little bit more soy, a little bit less soybeans. I think if there's surprises compared to these estimates, it's going to come here in these corn and soybean acres. I don't think this is enough of a difference. These small ranges that we're seeing here, just very small acreage numbers. I think you could see a bigger shift. But we'll see what the USDA has to say come Monday. All wheat acres, 45.4. That's going to be up slightly from the numbers that the USDA had said last March. Excuse me. As far as quarterly stocks go, corn stocks down from last year, while soybean stocks virtually unchanged and wheat considerably larger than a year ago. Hearing from a lot of producers that are harvesting wheat right now, they have to harvest this crop. They have to sell what's in the bins right now. They've been sitting on this crop, and a lot of it's in the bins. They're selling it, not new crop, but crop that's sitting in the bins, old, trying to make room for the new crop. And that is pressuring the markets. This week's cattle facts show us down 5,200 head for 227,000 head, so certainly tighter cash numbers. And I think it's very significant to note that packer margins have improved greatly as we had lower cash trade last week and higher cutout values. Now packer margins estimate to be about negative $25 a head. that negative margin is much better than what they've seen in the last couple of weeks. I think it will allow them to expand their kills this week and pay up for the cash market. So I am in the camp we're going steady to higher for the cash trade. It'll occur later in the week, and futures market really not dialing that in. We've tried to rally during the day, sold off by midday. In the last couple sessions, we'll see if we can repeat that pattern. If we break that pattern here today into tomorrow, as I think we will see higher cash trade. All right, I'm going to sign off, but wish you a wonderful day, good luck, and good trading. This has been Brian Hoops from Midwest Markets.